Well, good evening, ladies and germs out in Radio Land. I need a sight and a sound check, please. Make sure we're all ready to go. Thanks, Walter. I'm 51 by 51, huh? Okay. All right. I've got to get going here because I've got to be somewhere at a little bit past 9. So let's get started. All right. I want to welcome everybody for joining us on Sunday night. You probably got, probably more important things to do, but, getting ready and doing our work for the, thanks, Wayne, for the week ahead is part of our homework and part of our business. All right. If you want to follow me on StockTwits and the posts that I go out there, I will attempt to do a better job now that I'm back full-time trading. Is you could follow me on StockTwits there. Plus, I'll be posting a little bit later where my at my YouTube channel where I'll be posting the recording for tonight's video, and I also have some other videos that you may be interested in. All right, little disclaimer. Trading involves risk and loss of capital. Make sure that you know what you're doing, and nothing you are going to hear this evening is considered advice for any stock, options, futures, or whatever, and no strategy. You have to make sure you are happy with it, it fits your risk profile, and you've done your homework. Enough said. A little bit about me. If you haven't know it, I'm an ex-fighter pilot with master's degrees in both business and computers. Active trader since '98. Full-time trader since 2009. And I am primarily a technical trader, but I use some limited fundamentals, and that's where the earnings come in. I moderate for H&R Candlesticks from time to time when they need for me to fill in. And I do provide one-on-one mentoring if you wanted to go and check me out. Have a free consultation period. Right here, hitrun.candlesticks.com. Here on the left-hand side, we've got primarily a stock trading room and right-way options on the right-hand side. Primarily options trading, although you could actually take some of the trades and trade them as stock trades as well. In the middle here is the live trading alerts, and it is a real-time scanner of the markets. The best live trading scanner that I have seen, especially at the price. We'll talk about a special offer at the end of the presentation, so stick around. Tonight's agenda, we're going to go over the economic calendar, earnings calendar, market overview, some trade ideas. We're going to do I've been asked to cover what it is I do when I come up with my list every weekend. I'm going to go over that. Then we'll get into the Q&A and a look at your stocks, time permitting, and we'll have to cut that off at the back end when we get to the times run out. Here's the economic reports for the week. I ignored that Treasury budget on Monday. Tuesday, only the CPI at 8:30 in the morning. So Monday and Tuesday are pretty light. Import-export prices on Wednesday. Petroleum report at 10:30 on Wednesday. I love to trade the petroleum report. Scalp a couple $100 on a couple contracts. Very, very, very heavy on Thursday the 15th, jobless claims, Philly Fed, retail sales, Empire State, productivity costs. That's all at 8:30. Then we have industrial production at 9:15. That's all before the market open. And then we have business inventory and housing market index at 10. Then on Friday, housing starts at 8:30 and consumer sentiment at 10. All those can be market moving and changing events, especially Thursday. Lots to digest. All right, here's our earnings calendar for the week, and it's pretty light we've gone from very, very heavy to very light. This is basically pricing stocks above 10 and below 10,000 basically. Average daily volume in the last 20 days of 475,000 or greater, and an average to range of for the last 14 days of greater than 25%. Well, I want stocks that trade, that institutions are in. I want stocks that have a decent trading volume and that have a decent movement. I don't want stock that moves 1 or 2 cents a day. My idea is to make money, and to do that, in a short-term trader, I am going to need the markets to move. The stocks in yellow are short interest float, somewhere at 10% or thereabouts. Sometimes they go down to the 9s, but they will be fairly high short interest, and I use those if we get a rally, especially if a reversal. We can get a short covering rally on those, and we can get some really, really nice movements in those. All right, let's go over the markets themselves. I want to start with crude oil. And crude oil, let's go to a 6-month chart. And look like we popped out here in the end of April, and then we transitioned to a downtrend, did a big dip. We dipped back down to a double bottom in June, came back and retested 52 again here in early to mid-August. Is this going to be a double bottom that propels us up higher? I have no earthly idea. What we can do is we can know that we're still in a downtrend until we can make higher highs and higher lows. All right, give me a second. There's the low. We have to get up here. We're going to have to get up to over this 55.50 level basically, make a high, and then make a low and hold it. Right now, I'm not going to put any real credence into 2 hours worth of trading right now, but right now we're in an uptrend. Short term, two days. So as long as we're in that uptrend, I'm waiting for a pullback, establish a higher low and a higher high, and then I can say that we're in a possible long trading trend for crude. Gold, let's go back quite a bit here on gold. All right, gold for the longest time was holding right around 1250 to 1300 and bouncing around in this trading range. If I went to a weekly chart, you can see how we did from 1200, went up to 1300, pulled back to the 1260, 1275 level, and then somewhere about the end of May, we started to shoot up. Here's where all the money is made in this trend. And you can see how we went up, leveled off a little bit for about a month, and then we went higher again. Let's go back to a 6-month chart. We're kind of consolidating at the top, but my stochastics RSI is probably telling me we're due for a bit of a pullback here. And where could the pullback be? Lord only knows. I mean, we could pull all the way back to 1450 to 1460 and still be in an uptrend. All right, let's go on over to the equity markets. I'm going to zoom in here. It's kind of a 3-bud chart. We did a bottom here in early June, did a rally, and you can see I have an 8 and a 17 exponential moving averages here. As long as they're basically in parallel, we're in a trend, up or down. You see how the 1st of August, we transitioned to a downtrend on this kind of a toppy, almost double top here, and we came off hard. What date was that? Basically the 31st. We came off hard. That tells us that that short-term uptrend was ending or potentially ending. We did try to rally a little bit. I've got over 3,000 in the S&P, and it closed lower. That was confirming that the downtrend to me was intact. If you were here a week ago, I said that we would probably retest the 50 to the 100, maybe even get eventually down to the 2880 level. I had no idea that we were going to get down to 2800 and get to 2800 that fast. That's why we cannot try to predict. We can only just watch what the patterns are telling us and go from there. Now, because we had this huge down day on the 5th, that provided a void for us to rally up to. We rallied up to 2940, and we're now pulling back on Friday, and it looks like we're probably, due to stochastics RSI, looks like we're going to pull back. If we pull back and hold the 2800, the 2880 to 2890 level, I think that'll be fairly bullish. But again, we're going to need higher highs, higher lows. So we're going to have to pull back at some point. What are the blue dots? Where are you seeing blue? Oh, you're talking about these dots right here? That is a volatility stop. I can go over that when I get over there onto TC2000. Remind me, ask what the volatility parameters are. I can show you what those are. If you have TC2000, we could give you that those settings, or if you have Thinkorswim, we can also provide that for you. All right, what I mean is we're in a downtrend until we could actually get higher highs and higher lows. So right now we just had a rally. It was a rally, a reversion to the mean, and the possibility exists that we could get a resumption of the downtrend. If I would take this and invert it by putting a minus sign in front of the ES, we could rally or fail, as this is a spike higher, pullback, approximately 50% retracement, and could be going to move higher. Dow, same as the S&P, reversion to the mean. Stochastics RSI says we're probably ready for a slight pullback or pause or more than that. NASDAQ is pulled back. All the markets pulled back on Friday. Again, this could be just a reversion to mean dead cat bounce. It could be something more than that. We'll have to see. The markets will tell us. And what it's going to tell me is when we go over those highs from Thursday, or basically go below those Thursday lows. So right now, that is my trading range on the NASDAQ. If I were to look at the S&P, why don't I do this? That's pretty much my trading range. Anything inside of that is noise I want to avoid. We do not have a trend. Anything above that, we're bullish. Anything below that, we're bearish. Same thing happens here for the Dow. You can see how we've got this around 26.4. And now we had this kind of shelf there just above 25.9. Anything in there is kind of noise, it could be either way. Above that, I'd be bullish. Below that, I'd be bearish. All right, let's get to the weak sister in the group. And that's the Russell. Russell pulled back. Still an inside day on Friday, just like the others, but a little more negative and less bullish on the rally at the end of the day. And a little more negative today. Overall, very similar to the others. I have a top here, and I've got a bottom here. Anything in this range, I do not know exactly where it's going to go. Above that, I would possibly be bullish. Maybe. I would definitely not be bearish. And below that, I would definitely be bearish. All right. Let's get back to the slides. All right. We've got some trade ideas, both long and short. I've got a bunch. And we're kind of in no man's land, so I picked out what we've got. We've got probably about 10 to 12 of each. And I'm going to bring up TC2000. And these are the longs. And you can see those were blue dots on TC2 on Thinkorswim. They correspond to the green dots here. Let me grab one that's a little better, easier to see. All right. These green dots correspond to the blue dots in Thinkorswim, and that basically shows that this is a volatility stop. I'll do an edit here. The true range period is 10 days. The multiplier is 1.5 standard deviations. So basically, if you have your stop down at this level or the stop on a short above the red dots here, on most days you will not get taken out. Not all days. You see how we got taken out there. They are the same as on TOS. And if you need for us to provide you with the script for that, let me know and I'll post it at the end of the day or end of the presentation here. Let's go on over to AMAG, AMAG. Well, why don't I let you go and look here. You will not be given a recording. You will be getting, what happened here? Hold on a second. I'm going to have you go off to my YouTube channel and pick up all right, hold on a second. I got to find it. Bear with me, folks. I'm reposting the, yeah, we'll go over the ATRs in here in just a little bit. There's trading. I've got trading. All right, I'm uploading it now. Sam, if you want, not Sam, Max, if you want to look at that, go over to slide number 9. All right, AMAG, you could do a screenshot here. And AMAG, we had earnings reported here. It gapped lower and started a rally pullback. We're now in a roundabout a breakout. I'm looking for a 45-degree runner towards the 200. Actually, the 200 will be pulling down to about 13.25 to 13. So that would be my target on AMAG. OR. It's a gold stock. Big, huge rally, pullback, back to the T-line, the 8 exponential. You're welcome, Max. And I'm looking for at least a retest of 13.25 and possibly higher. If gold goes higher, this one will probably go higher as well. GDX. Thanks to Sean G from our trading room. He likes this one. We've basically got an Oreo sandwich, 2 dark candles, and the cream filling. He believes that this one's set up to go higher. $30 to $45 runner. AMC reported earnings, gapped up. Where did it gap up to? It gapped up to a prior kind of trading shelf and then stopped. Friday, it basically did a second doji in a row. This is a possible 1, 2, 3 continuation. It could even go 1, 2, 3, 4 and then move up. But this one more than likely wants to go higher, especially since it has high short interest. All right. STMP. STMP gapped up. It's in this gap back here from, let's show where it is. The traditional gap is there. My non-traditional gap is from a little bit lower to there. And so now I think we could potentially go up to the 70s. And this level right here is what, 76. So will it be a straight line? Probably not. You could probably get a $5 to $10 run here without any difficulty because there's a void here. Voids could be no trades, or voids could be one big long candle like that. That is what I also consider a void. Both of those are equal in my book because that waterfall, there's very few holders of stock there that will be waiting to get back to break even and sell. Another one we got out here is Overstock. Possible 45-degree run after earnings here. And Overstock is also, no, it's not a, I think it actually might be high short interest. We'll cover that in just a little bit. Hershey did a J-hook right here where it moved up higher. Then did a pullback basically the breakout area, and then started another one. It's in a, there's 1, 2, this would be the third surge higher. This could be getting a little long in the tooth, but you never know how long they will continue to go. I would not advocate going long here. I would wait for a pullback. And somewhere in this neighborhood where the prior breakout would be a target to try to buy with a bullish signal and a reversal. So do not buy the extension, just put it on your watch list, wait for the inevitable pullback, and then wait for the curl back up. Kind of like what we had here about a week ago. Horizon Pharma. Horizon Pharma probably wants to go up here to the $29 level. What we did is we had a huge move up, and we had an inside day consolidation on Friday. I would love to get a little bit more of a pullback down to this level here, about 2650 or so. Then a curl back up and break out. I do not wait for the break out. I will buy I'll buy the pullback and curl back up. I'll buy just over that curl up with a stop right here, and my first target will be the top of the prior swing, and I'll take half off the table there. Then I manage my trade as we go higher. I don't wait for this because a lot of times Even if this thing just went back to say that it did a curl back up here, and I went long here, even if it goes right up to, it does a little bit of a breakout and then fails, I've already taken half off the table there, and I would have to let it go all the way back to my entry point, plus that same distance again before I had a loser. Am I going to do that? No way in Jose. I'm probably going to have my stop rising as it goes higher, and I'll be stopped out at either a slight profit or the same near where that breakout was. I will set it just a little bit below probably the swing high, because I have to give it a chance to come back. All right, let's go to MedP, Metapace, and I'm looking for a breakout above the swing high now. We were looking at originally that's a 77 to 77 and a half. It got up to the 80. This looks like it might want to try to pull back here and do a cup and handle, and then you can either buy the curl back up, or a less aggressive trader could try the breakout. That doesn't mean that it's less risky, because lots of the breakouts, especially the markets that we've got going on right now, are probably not following through. All right. Weight Watchers. This is an example, and not necessarily a trade right now, but an example of a 1, 2, 3 continuation move after earnings. It does have high short interest. Could we get another rally? Yes, we could. Let's go to the weekly. I basically have this 32 in change, 32 and a quarter, let's call it 33 and a half. I've got that as some minor resistance, but I've got heavier resistance up in the 47s. So that's on a weekly chart. That's not on, that would be a longer, in fact, RD, we're going to go over that in detail in just a few minutes when we cover here. Because I was asked that after last week, somebody emailed me and said, look, can you go over it when the next time you're on? I said, sure. Okay, so that's where we're going to use up some. It had earnings. The prior movement into it was kind of iffy. The guys weren't really totally confident. It gapped up against it. High short interest. We had a covering rally. We had a doji. And then the continuation started on Friday. 1, 2, 3. Now this one might take a few days to creep higher. How high can it go? Probably 34, 35 before it does any kind of consolidation or pullback based on the prior swings. ZTS, another example of a 45-degree runner. Let's go to a 3-day chart here. You can see the consolidation going into earnings. If we go to a weekly chart, you can see how it kind of got iffy here and how it jumped above that when you look at the daily. With about 118 opened, and we had a 1, 2, 3 continuation move where we had the big move is number 1. The doji was number 2, and this move up here is 3, ... So if you see a stock that has high short interest and it gaps over here, maybe use a 60-minute chart, get in early. Well, what if you didn't notice it until the next day? Well, watch and see if can get over this level here. When it gets over that level there, you can go long. Where would your stop be? My stop, a lot of people say, well, you got to have your stop under here, or you've got to have it under there. No, I don't have to have my stop all the way down there. I get on a closing basis. Here's my volatility dot. My volatility dot, and if I entered on this day on the breakout, would it have been all the way down here. I do not need to let it go all the way back down to there before I realize that it's not doing what I expected. I expected it to do a 45-degree run. So instead of just sticking around and being bullheaded about it, I'm going to try to use about half this wick. Halfway down that way. If it gets down to there, I'm out. I can always get back in if it goes back higher. But it's not doing what I expected it to do. Exit stage left. All right. Another one that's doing a pretty good 45-degree run here is McDonald's. Is it set up for us to go long right now? No way. Need to do is allow it to work its way higher. Figure out where that top is. Let it pull back. And I'm going to guess that it's going to be somewhere around this 217, 218 level. It's going to come back to the breakout level. It may actually go below it, dip below it, and come back up. It will have established then a higher high and a higher low. Then we can base our stop, our entry. Say it goes up here, comes back. Entry can be on a bullish signal above these lows, and below those lows our stop. So if we were to go long here, we would probably have to have our stop way down a lot lower than if we wait for the pullback. It will reduce our risk significantly. Another one out there that's doing a pullback that I'm watching is Match, MTCH. Nice big move up, high short interest, pulling back. I would expect it probably to do somewhere in the neighborhood of the 50% level here. If it comes all the way back down to 78 or so, I'm probably not all that interested in it, although it would still be somewhat bullish. The retracement, if it's really going to work, should not be more than about 2/3, 66%. Well, this is 75%, so maybe probably the 80, 50, or $80 level. If it goes below that, I'm probably not interested in. Lots of times if they come back to this 60% level, all they do is retest the prior swing high. If they go just to the 50% level, they usually have a good chance of breaking out. So that's why I'm watching that one. As soon as I get a bullish signal, I'm going to buy some 45 to 60 day options. Roku back here was on a nice move up on earnings. Had a trend that it followed, broke down, came back and retested it, tried to retest it and failed. Then it came back and went back down to the 50. Earnings again, and it's now retesting this trend line. If it breaks above this trend line, it's liable to do a pullback, and I bet you it's going to be somewhere near that trend line again. And this is the area that I want to try to buy it for a resumption of the uptrend. Okay, last example here is Shack. Here's one with very high short interest. People said, my goodness, this thing ran from mid-70s to the mid-80s. It can't go any higher. Well, so far it has. Now, is it going to run out of steam? Possibly. So, never say never. Never say die. We could have done is gone to the hourly chart here as it moved up here, did the pullback. Here's our J hook. We're looking for a move above this level to go long, and our stop somewhere under there. So this would be what we were having at risk, this amount here. As versus waiting on the daily, where most definitely you have a much wider stop. All right, let's go on over to shorts. Not yet, Dolores. Jumping the gun. And Boot. Boot went up here, gapped up, crapped out. It tried to rally. This I'm seeing as a potential blue ice failure. Blue ice means basically it busted down through the 50. The 200 is below it. It goes towards the 200, somewhere around 30 to 50%. Goes back over, comes back up to the 50, kisses it goodbye for an eventual drop to the 50. Kind of like a dead body. All right, so anywhere in here, break below 30.70 to 30.50. This could be a decent short with the target around 27. Bruker, huge gap down, move down and fall out on earnings. And it tried to do a rally. If I go over, shoot. Okay, hold on. Here we go. Minus BRKR. And you can see how it's basically did a bull flag, but that's actually inverted, and it looks like it's going back up. So Bruker to me looks like a short. Where could it go? Probably in the 37s. It'll probably, a lot of people say, well, it's probably got support at the 200. Well, to me, moving averages do not provide anything except maybe temporary support. What's going to give you support is price. Well, let's go to a 3-day chart. This area in here, let's go to the weekly. This area in here at 38.25 could provide some relief for it. But if I get down to there, I'm probably going to have a little bit of a profit, and it shouldn't be too bad. I can always exit, but it does look like it could get hit and hit hard if we get any bad news out on the markets. And they're basically, if you look here at the balance of power, the institutions are bailing out on this one. They were actually accumulating it into earnings, anticipating probably good earnings, and now they're getting rid of it. Deckers has bad BOP down to the 200. A break of the 200 will probably take it into the 137 area, $7 or $8 lower. EXP, Eagle Materials, Building Materials. This one's a little bit difficult to read. It's a very wicky. Only trades 500,000 shares per day, which is probably one of the main reasons it gets kind of wicky. But what did it do? It was playing around with a 50. It dropped down, moved back up to the 50, which is basically the trend line. I'm looking for it to go down and retest about $80 to $81. Now, note, it has earnings at the end of the month. You think people are feeling good and happy about this one, anticipating good news? I don't think so. This is the EMA only chart. It's basically flat to down. So they're not uber bullish going into earnings. FBHS, same thing we did before, broke the 50, went up as close to the 200 as, the 50 as it could, went to the prior gap down level, and then is rolling over. And first target would be around 49, call it 50, and the other target would be down to 200 around 48. Thanks, Bob. I had EXP as, the 29th. Insmed did this huge move down. I wish we'd have got a bigger bounce before it rolled over. It's only $16 stock, so you may or may not want to short it. And I'm not sure how much, because this was a huge move. A measured move would take it $6. Do we think it's going to go $6 lower? Well, there's $11.50 if it retested there. That could be $4 or $5, but that would be a significant downtrend. Now, I'm going to warn you, biotechs are not for the faint of heart, and this one has an average to range of 8.36% per day at $1.36 per day. So it is a big mover, mainly with, I guess, a lot of that volatility is in the last 2 weeks. Another one that showed up on my list as a possible failure here, I'll put it in the blue ice category, although it isn't exactly, is Target. Target reports on the 21st, which is only 10 days from now. It's not looking so good. Thanks, Bob. Walmart. Walmart rolled over the end of July. And it did this bounce. The retailers could be anticipating the trade war getting a little more heated and maybe prices for imported goods rising, which could either hurt their margins if they try to maintain the same sales numbers, or the consumers say, I'm not paying the higher price, and one way or the other, they will be hurt. So I'm seeing it as a possibility that it goes down to 102. Let's call it the rising 200. One other thing I want to point out here. Now, I'm not a big fan, as you know, of using moving averages as trading signals. But as potential targets and to look around, I will use the 50, 100, and 200 period simple moving averages. I found from a hedge fund manager up in the Boston area that a lot of his clients used the 100 period moving average. Once it broke to 50, it went to the 100. They started to accumulate there, thinking that it would do the bounce and turn around. I've now noticed that that's usually a halfway move for the down move or up move. Another one that looks short is CAR. It broke the 50, moved back above it, but I think that it bounced off of this level. I look like for a retest of the $23 level at a minimum. Best Buy. Huge drop on earnings. No, not on earnings. That was probably a warning. It reports on 8/29, and potentially, if you could get 65, it could go to 62 easily. Now, some of these are probably not going to happen until after the earnings reports. And if that's the case, then there's probably not enough in it. If you could get in a few days, 5, 7, 10 days in advance of the earnings, you could make your money and get out before earnings. If not, then so be it. I was short Grub from up here, and the potential bottom of around $65. I exited for the weekend in case some miracle happened over the weekend and we had some sort of good news from China or something like that. I could re-enter this anything below 65 with a target around 61. And the last one I've got here, I also was short Fox on the earnings day. I took a little bit of profit as it turned, looking at a 60-minute chart. It looked like it was running out of steam to the downside. I said, you know what? This puppy's probably going to come up here closer to 36 on a bounce at best. Looking for the bounce up to this area right in here. And stochastic RSI is telling me it might. And then what I'm looking for is a rollover. I'm going to watch the 60-minute chart and roll over. Am I going to wait to go short when it goes below here? No. I'm going to do the opposite. This is an inverted J hook. When it does a bullish signal right here, I go short again with my stop just above the $36 level. All right, let's get back over to our chart. All right, it said stick around. There is a trial offer for hit and run candlesticks or right way options. $49 for 2 months. You can't go wrong. Can't beat that one with a stick. You know, basically $25 per month. Over a 2-month period, you should be able to tell whether that is going to work for you or not. I can all but guarantee you, if you're half a trader, that you will get all of that money back and then some. Big time. All right. People ask me how I created my earnings list and looked at the high short interest. I'm going to go over that real quick. I first of all create my earnings list by going out to ocadoday.com. Let's go here. And Ocadoday has the major market. I look for FOMC. I look for major events that could move the markets. Now, where am I looking for? I don't trade pre-market or after hours. I will have and will watch the pre-market futures and see how they react to these numbers, but that's less of importance to me. That I want to know when there's going to be a report that is a red or a green dot while the markets are open. Because I could get smacked if I'm not aware of it and watching it. So over here at the consumer sentiment number at 10 o'clock on Friday, if I get into something at 9:45 and I suddenly see a heck of a weakness start to appear at 10 to 10:05, I might want to say, you know what? I may not be watching those consumer sentiment numbers, but somebody probably is. And I might just exit stage right and live to fight another day. The other things I do is I go over here to calendars. You can sign up as a free member to briefing.com. You will not be hassled by them in any way, shape, or form to try to join their paid. You will get a few advertisements, but it's not onerous. And with that, log in, go to calendars. They have their economic calendar, but I like Ocanoday's layout better. I don't care about IPOs. I really don't care about earnings guidance and conference calls, but I want to know about earnings. I go over to the earnings date. I go over to this week, and then it will show me a snapshot of what they consider the stocks of each of the day before and after the close. Well, you've got to go to the full listing to see all of them. There were only 3 on the 12th. Let's go to the 13th up here. See, the 13th they had 5, but we've got somewhere like 10. So what I want to do is I want to copy all these that have confirmed teleconferences, conference calls going on. These are confirmed reports with the checkmark box. Bilibili does not have a checkmark box next to it, so I most of the time ignore those. When I don't have a whole lot of them, I'll go ahead and put them on my list. But if I've got 100 or 180 of them reporting that day, you better believe that one, I don't copy down any of them that don't have a check mark, and I also may raise the minimum average volume to try to weed out some of the either lower price stocks or lower volume stocks. Another way to do this, let's just say that I've got all these right here. Do I want to hand type all of those in? That's not that bad, but if I right click on it and copy it, and I close it up. Here we go. Go to Excel spreadsheet, go in here, right click, paste special, and all I have to do is copy those right there. And in fact, if I had morning and afternoon, all I have to go is up to this column, right click, copy, and I can copy it over to where I want. Now where I copy it to is TC2000. And I'll have some sort of earnings date here. Let's get rid of that. And what I'll do is I'll right click in there and I will paste those in. I don't want to ruin this for the shorts. And you put those in, so everything you had there was pasted over. And here's where I do the scan. And my scan conditions are average to range and volume and the price history. All right. And so therefore I go from, whoops. Let's go, I've already copied them off. Let's just say that I could have 60 or so in this list for the earnings. And as soon as I scan it, it'll eliminate the low volume, low ATR stocks, and I'll be left with the ones I'm interested in. Right click, copy all symbols to clipboard. And then what I do is I take it over to a Word document and I put them in to groupings: Monday, Tuesday, Wednesday, Thursday, Friday. Everything that reports on Monday before the open is on Monday. Anything that reports after the close on Monday or before the open on Tuesday, I trade on Tuesday. I won't trade Monday after the bell earnings reports. Too many times I've seen them whip around the next day and go the opposite way of what they did and after hours. So don't initiate a trade. Now, if you happen to carry something over and you get a good gift in your favor, by all means take the profit. And then I collate them. Let's just say I have these earnings here for Tuesday. I'm going to copy these. It takes me a lot longer because I'm describing it every way as I step through, but it actually doesn't take very long. Then I go over here to FinViz, copy that in for that day, and then under here, under ownership, float short, and then I look here and see which ones have float approximately 10% or higher. That's a relatively high. They use 25 or higher. I don't think it has to be that high for me to get a short covering rally. So VFF, Avaya, BE, CVET, ME, TIM, and EAT. Those are all high short interest. Anything on these stocks, let's see, Avaya, which is 08-12, no, 08-13. Okay. Avaya, since it was down here, if we get a gap up, just say that it gaps up to 12.5 on Tuesday morning, I could think it could easily run to 15. I would go long that one, assuming it followed my 5-minute opening range rule. Now, if you don't know what that 5-minute opening range rule is, you could go over and I'll show you my Top Gun Trading archives here, videos. Go here. here. That right there is the public e-learning we did in April on trading gaps. And in there I'll talk to you about a 5-minute opening range, but that's how I trade gaps. You could go, let's go back. This is where you are going to get the recording. Whoever it was that was asking about the recording, that's where you're going to find it later tonight after I render it and upload it. And it'll be the first one on that list under the home, or you can go into the videos. All right, let's get back to... We went through the longs, we went through the shorts, I believe. Yep. Let's go back to look at the week ahead. You can always follow me on StockTwits. I attempt to put out my list each weekend. I cannot on the high. If there's a high number of earnings reports, there's no way I can post it for everybody to see. So I'll just usually try to put on a daily basis. I'll try to put out the night before, put out my top 5 or top 10 long and or short. So I'll do that list. So you can follow me there if you want. And all right, this is general questions, not stock specific. Don't post any stocks yet. Does anybody have any questions similar to what we had with the volatility dots? Anything about my charts? Anything that I've covered so far? One of the best ways to learn a lot about this is sign up for that 60-day trial offer. Come on in and you can ask away, ask questions. Get them live. All right, I'll give it another minute or so. All right. Price action versus moving averages. Price is king to me, Happy Gill. I use swing levels for support and resistance levels, which is why you see here on Avaya. Let's go back to FOXA. FOXA came up on its earnings day, started to break out, could not get over this level here, and I'm going to show it. That's basically the area that it was at. If I go to a 3-day chart, you can kind of see it better. That I was thinking it might get up to 37.86, but it gapped up and crapped out. If we go here on Thursday, see how it gapped up and never got above the 5-minute opening range? I never would have been long FOXA, even if it was breaking out, because it's got to break out above at least the body, if not the body and the wick, for me to go long. Now it came down and it failed and went short, and I went short, followed it down here when it did a double bottom, triple bottom. I said, you know what? The momentum's gone. I'm gone. I just took my profit there, a couple $100. All right, let's see. All right, look at your stocks. I've only had time for one symbol and one only. If you put 2, I'll ignore the second one. And please tell me long or short. Thank you very much, Thomas. You set a great example. Told me exactly what you were looking at. Let's go here to back to the daily. And you want to look at the weekly of Merck. Merck is just riding up. If you're already long, stay there. If you're not long, You either have to wait and play the breakout or wait for the pullback after a breakout and see what happens. That's really all there is. I'm sure you probably already do that. This area right here of 86.80, because I'm on the daily, be careful. We could go just retest that and see what happens when we get to 86.90. Yeah, already long. Okay, then watch and see what happens when we get up to this prior swing. If it's going to break out, it'll wobble there maybe and then continue. Okay. Barry C., are you bullish on precious metals and mining stocks? I don't put them in groups necessarily. The whole sector has been hot, and you saw a few of them showed up, but some of them are really kind of overbought. So, as a group, no. Cerner short. Yes, but only probably on a move below about 70.75. Yeah, the 70.75. I'm going to add that to my list. Thank you. What's the target on this puppy? Maybe 67. There's the 100. I would expect some sort of wobble there. Yeah, that's kind of where this level, the tops, the bottoms here are usually what I use for support. 67, and then ultimately the 200. But let's not get too greedy. IDXX. J hook on the daily. I see a scoop. This is not a J hook in my book there, Bob. If you think that it's a J hook now. A J hook looks like this. Strong move up, pull back, and then reversal up. This being the J. The pull back and move back up. Kind of a hook. Now, this one did the move up here. I think this dip is too sharp and too low. We went. So I can see how you would think that that was a J hook. See, this pulled back 9.2%. Notice how the moving averages rolled over and established themselves to the downside. Use the EMAs. This got established in a downtrend, even though it was short 3 or 4 days. We have got to make a higher high and a higher low before I'm going to be interested in going long on IDXX. Right now, I have to put it aside and I could only watch it. There are better ones out there. The pullback here was too deep, in my opinion. Okay. NVCR. Novacure. Oh, wow. Dolores, you should have told us about Novacure back here in July. Notice how we would go up, stabilize, go up, go sideways. Basically, no sellers. When I see things like this where it goes up and then sideways, there's no sellers. It goes up, it kind of ran out of steam here. Not sure what happened here on the 24th. It's not 24th, the 25th of July. 7, 8, 9, 10. Probably earnings. If we're coming up on 10/24, and now we're looking at 12/24. Brain cancer. I'm brain dead. Do they do transplants? We did the breakout here at 72, ran to 86, 14, did the pullback. Now, Here's one of the problems. Is it going to continue to do this march up all the way? I don't know. Let's do a Fibonacci expansion where let's say that we went from here. We went up to this level here around 86 and a half. And then it says we're going to 100. This is in this ballpark. Once you get over 90, 95, 100 becomes a magnet. The one thing that's a couple things that are somewhat disconcerting here, Dolores. Notice how the balance of power is not as strong as it was before. Very strong, less strong, less strong, meh. This tells me that we might need a deeper pullback before going higher. So be careful if you're in it long already. Watch out. Know where your stop might be, how much you're going to give it. Again, remember, I like to go long on the curly Q above 83 with this taking half profits at something like 87. And then I got plenty of room to let it wiggle. All right, let's go back here. CPRT. I think I remember looking at that last week. Oh, yes. This actually looks, CPRT, Scott. This is a perfect short setup. Okay, the reason I say that is that we rolled over. The moving averages have gone down. We had a deep retracement, and we're doing basically a 50% pullback here. Let me show you the quads. That right there is the 50% level, bounce off the highs. Right at the 50, this is setting ourselves up for blue ice failure. A classic. Now, could it go back down and retest 7270 and then resume the upward trend? Yes. Could it continue the upward trend from here? Yes. But I would say under 75, I would go short, and my stop would be above 76.50. You're welcome, Dolores. But thank you for Copart. But do you see what I'm saying, Scott? About it, it's changed character. Copart was a bullish chart from May to July, but it changed. Okay, I just want to make sure. Okay, what I'm going to do, quads, poor man fibs, TJ. Quick and dirty. That way I don't have to play around with it that much. Mutar, no more stocks, no more symbols, please. Okay, PGR long. All right, what do you think I'm going to say here, Mutar? I bet you're already thinking, well, if he didn't like Scott's stock, he won't like mine either. And here's the EMAs. We've transitioned down to a downtrend. The reason I use moving averages is it helps those who are untrained at visualizing the trend. It's kind of like training wheels. So when you see things like over here, it's going up because there's a separation between the two. It's kind of like railroad tracks and or a road. Then it gets narrow here, and the road gets a little dicey. And then it went back to a road again. Then it started to go down. We went down to that 77.28, which was the breakout level. It went back up to the 50. And assuming that it does not break higher. Okay, so here's my out. If you break above 82, it's bullish. If I break down below the 79 and a quarter, it's bearish. That's your trading range. And I had a buddy of mine who was long progressive, long dated options. I told him he should get out of it, but I don't know whether he got out or not. He didn't talk to me anymore. About it anyway. Okay. Stochastics and progressives not going down yet. I do not use the green one, the fast one. I use the slow one. And in fact, I do need to get a crossover like we did here. But I don't use stochastics RSI for anything except confirmation, Chris. Confirmation that we're going in the direction that price is telling me. So we had right here, we had strong move up, double dojis, a little bit of a shooting star here, and then a move down, and we cross under, then it confirms what I'm reading up here. Confirms what I'm reading up here. We'll come back every week. I think we've got a lot here to provide you on a freebie status. Please, please, please. I cannot. If I could, I would grant everybody a free 2-month period, but there's no way we can. We have to pay for our upkeep of the servers and everything. $25 a month, 2 months, $50. You could go to a good steak house and spend more than that with tip. And you got 2 months to probably get enough money to play for 3 or 4 trips to the steakhouse. Or, as there was a newbie came in from last week's presentation. This last week he said he earned more with the 1 week in the trading room to pay for 7 months of the full price. No, I'm just talking about the rooms. Let's go back up here. The hit and run candlesticks and the right way options. The offer here. I'm probably laying it on a little heavy, a little thick. And Ed Carter is here, who's the King Daddy Rabbit for the LTA scanner. Ed, where did I put it? Products, live trading alerts. All right, $147 a month. However, that $147 might seem like it's expensive. Actually, I was paying between $300 and $400. Hey, that's okay. Yes, please. Anything you can provide. But the LTA scanner is the best, most configurable scanner, real time, during the market hours that I've ever seen. And for $147, it's a darn bargain. It is actually a steal. You're welcome, Cameron. I can guarantee you that we get a very, very significant portion of our alerts off of this, or the stocks to trade, the scans. As far as which ones do I use, I'm a little bit people will use all different ones, and I'm kind of a stickler for wanting J hooks. So hold on, you will not see anything here. All right, I'll use the 3/8 trap, bear, bull and bear. I'll use the RBB pattern on the daily. The bullish pop out of the box. I could use the negative one, but I don't have that up the morning. Morningstar, bullish trend. And my favorite of all favorites is the bullish J hook, and this 2-bar low rev through the body is also a J hook to the positive. And I also have a J hook to the downside, So basically, anything that I have to the upside, I could have to the downside. And depending upon where we're going, yes, absolutely, they're real-time updates. That's why it costs so much. There's some tutorials here. And some FAQs. Come on under products. And here's written guides, video tutorials. Ed's put in a lot of work here, as well as putting together a super program. He's done a great job of putting up training materials here. I don't know when this guy sleeps. All right, I'm already 15 minutes late. My wife will beat me around the head and shoulders. I want to say, be smart, be safe. The markets are going to continue to be volatile for a while. As long as we have the Donald with his finger on the Twitter button. All right, you guys take care. Come join us. I'm sure you'll have a great time and make money. Aloha.